Good morning. Predicted Trades family. Hope everybody's doing well. Hope everybody had a great weekend, was able to reset, disconnect from the charts, get that mind right. Because we've got a fun week ahead. This week, the Friday is the 15th, and it is option expiration, monthly option expiration, OpX as we call it around here. So that's a catalyst for things. Futures contracts, transition over, options contracts expire, monthlies. So we could see an interesting week. Let's go take a look at the economic calendar. So Monday and Tuesday, not too much going on. Wednesday, we have Consumer Price Index, CPI, dropping at 8:30. At 2 p.m., we have the Beige Book dropping in the federal budget. Thursday, PPI, Producer Price, jobless claims. And then Friday, we have retail sales, manufacturing index, and then our University of Michigan Consumer Sentiment Index and inflation expectations. These things come out every month on the OpX week. So that's a review of what's going on with the economic calendar. Now, let's dig on into the charts and the thesis on the week. So we're looking at a 4-hour chart so that we can get a view of the entire year and look at trend lines and the structure that we find ourselves in. On ES, right, since the first of the year, we have been in a downtrend. And every time we come back to test those trend lines, we get rejection. We have a gradual one from the high right at the beginning of the year and the high in March. Then we have a more aggressive one that has represented our drop since March. We have rejected this every time we get near it. So let's look at where we find ourselves. The last time we were near this trend line, the daily 50 was also very close. We also had a daily squeeze that was in place. And we set new low of year, rushed up to those trend line and daily 50, and then went sideways underneath it, never testing either before going back down for new low of years, right? Now we find ourselves in a similar situation where we fought back first to the daily 21, this white line. A little pullback to find our feet and test this level where we kind of set a inverse head and shoulders, right? Here's the head, here's the shoulders. Came back to test that, and we kept on going up through the daily 21 again. We find ourselves in the same situation as back here, where we are arriving right underneath the daily 50, daily squeeze, and some key levels that we rejected previously. So let's see if we get something similar. This was not technically an OpX week, but it did lead in to the OpX week, right? So I bring this all up just to point out we could find ourselves in a situation where, just like last time we got here, we kind of went sideways at it. We have an OpX week where we can find ourselves going sideways. back when we were in a very bullish market, every time we had an OPEX week, we usually got sideways chop while they set up for the next bullish leg. So, today, we find ourselves at the daily 21 pre-market. We had a strong run last week, pushing up above 3,900 a couple of times. Futures last night kind of just settled us right back down to the daily 21. Small gap down. And basically settling at that 38.75-ish. We do still have this month's POC down at 38.28, which the daily 15 has pretty much caught up to today. So now the 15 and POC for this month overlap. We have POC for last month down at this 37.73. And since we are, not even halfway into this month, I like to track both. Because we could find that if they are done with the rally and ready to take profit, we could find that we magnet down to this month's POC and then cannon down to last month's POC to retest trend line from the recent lows that sent us back up. In a way, it's very similar to what happened here. This just happened in a short time frame. Like in 1 week, we hit, stopped, got tighter, dropped. Really, in a way, this has kind of been drug out, where we got high, came down, now we're back up. It's taking more time to accomplish what happened back here in a couple of days. Hit a new high, quick down, quick back up. Now it's a little more drawn out. So let's see if from here we start to wedge in between our trend line from these recent lows. And you could say a small trend line here, right? And I know it might kind of look a little confusing with all of these trend lines. I do like to try to draw from our extremes and a little more gradual, less extremes. And then what you find that you get is a little bit of a fan kind of shape where we broke our trend line just a teensy to set a more gradual trend line. And then we fought back up to that middle trend line, trying to hold it. So, for today, for this week, we find ourselves in a daily squeeze. We also have a 30-minute to deal with going into open and a 2-hour and 4-hour. So, let's drop on down. There we go. So now we can see that our 2-hour and 4 hours are all stacked together. On Friday, we were contained within them, right? And on Friday, at one point I'd like to make, when the indices are kind of trapped in a bunch of squeezes, if you look around at individual names, they weren't so trapped. And we'll see, like Apple, Google, Tesla pushed out of their squeezes and provided more opportunity on Friday than the indices did. But for today, we have our 2-hour and 4-hour squeezes sitting right at the daily 8, daily 21 zone that we have. It stretches down a little bit to our next zone, that 38.55, 38.43. As long as these levels, this zone made off of these two key levels, and this zone made off of the daily 8, daily 21, as long as this pocket can continue to hold us up, we can get back up to the top of this squeeze where the daily, or I'm sorry, where Friday's highs sit. We have the daily 50 up and outside of these squeezes at our next key zone. It's slowly arrived. And then we have that trend line that we talked about that we need to get through to actually break the trend of year that's been sending us down. So let's see if we can hold daily 21, daily 8 squeeze bottoms and head up to squeeze tops in an effort to get to our key zone above daily 50 trend line of year. That's our magnet above, and our magnet below is POC, daily 15, and last month's POC. So now we know what we're going to be playing off of this week and what we need to watch for signs for upside and signs for down. In Q, let's step back out to our 4-hour real quick, because it is worth noting that on NQ we have already broken through. Here's that beginning of year high and that March high, which would give a less gradual, I'm sorry, a smoother trend line that's not so sharp. And then here's our March trend line that held us down back here in the May to June changeover. And it's also where we rejected off of the new low of year when we popped up. Well, last week NQ already broke through. But any trend line that's held us down, when we break through, we have to start taking out recent highs. Otherwise, it can be a fake break that sends us back down. So, NQ already showing signs of changing trend on the year, but has to complete the task and start engulfing recent highs and even the highs before that were the last rejection, right? The daily 50 has come down to meet us, and on Friday, NQ tapped the daily 50 a couple of times. As you can see, it tapped and rejected, it fought back up, tapped and rejected, and we find ourselves right underneath this key 12,100. The daily 50 is now, about 150 points above that. And our daily squeeze top, kind of straddling that 12,400, 500 zone. So let's see if our trend lines can continue to send us higher. Our daily 8 and daily 21 stacked in a bullish orientation and providing support right underneath 12,000 psychological level. So as long as the daily 8 and 21 can hold us up and send us higher, get us through this 12,100, through the daily 50 to the daily squeeze top. Those are the targets to the upside. If we start to lose 12,000 and we can't hold the daily 8 or 21, we are engulfing Friday, and if we also give out these trend lines, which have now come up to support the 8 and the 21, we'll likely go back to that daily 15. Nice thing is, on POC for NQ, it stepped up just underneath this 12,100, so that our 12,000 is providing nice support, and we're going to be opening just underneath POC. So if we get a nice pop, POC could help accelerate us through these key levels, daily 50, get us up to that daily top. So let's see if NQ is going to continue to lead to the upside, Or if it starts to roll over and give out trend lines and the daily 8 and 21, then we're falling back into bearish territory. And let's go ahead and just drop on down to our normal time frame, because I forgot to check that on in Q. There you go. So there you have it, the squeeze, 4 hour, 2 hour. Oh, okay, NQ does not have a 4 hour, but it does have a 1 hour, 2 hour. So 30-minute squeeze, slightly tighter around price action. The top of it is at that 12,100. So if we can't get through that at open, then this squeeze top and that key level might send us back down to test pre-market low, squeeze bottom, daily 8, right at the extent of that squeeze bottom. So let's see if this downtrend continues to provide rejection at open and we come down to test Friday's lows, squeeze bottom, daily 8 before continuing higher. Or if we get right through that 30-minute squeeze top, that 12,100, to fire that 30-minute squeeze up to go test the 1 hour, 2 hour top right at the daily 50. These things don't just align by coincidence. It's all price action based. Moving averages follow price action, Bollinger Bands, Keltners, all of it. So it's beautiful when it lines up together. It just adds confluence to these levels being very important, and they should provide good support and decent resistance until one breaks. So play the range until it breaks. As we near this daily squeeze top, and we see 2 hours, 4 hours, whatever, start to appear, those can be the indication for, can we get through the daily, or are we going to stop at a 4 hour, 2 hour, and just head right back down to the bottom of a daily squeeze? So, levels to play up and down. Ready? Just like everything else, opening right at the 21, daily 8, as long as they can hold, send us higher to that daily 50. Everything's trying to get to the daily 50 for a test. I'm just going to move on to YM, because already it's pretty simple. And I'm going to step out to a 4 hour real quick just to look at that same trend of year, because they're each a little different. NQ's already through its trend line and fighting to get through the 50. Everything else still below its trend line. So you have your smoother one way up above, right with the daily 200. You have your more aggressive trend line, which sits right up with the daily 50 and daily squeeze top. So everything aligning the same. YM, looking a little weaker pre-market, already got through the 21 and underneath it, rejecting. And we still got a ways to go to get to that trend line of the year. We basically need to get back up to the daily squeeze top and that 32,000 to be able to test that trend of the year. So NQ leading to the upside, but we need YM to catch up to allow ES to get up to its trend line and to get up to the daily 50. But for YM, daily 50 catching up to this 31,800, the last thing that we rejected. We're scooping back up. We are above these daily moving averages, slightly below the 21. Our 30-minute squeeze top aligns with that daily 21. 30-minute squeeze bottom, a little below the daily 8, and sits with the 2 hour and the 4 hour. So we've got a lot of stacked squeezes right here at 31,000. So let's see if that can hold us up, if YM can hold pre-market low. As you can see with the slip that YM had overnight, it's already gone below Friday's lows. So for upside to continue, if this then that, for upside to continue, YM needs to get back above Friday's lows, push back to Friday's highs, and the top of the squeeze. If it continues to reject and stay below Friday's lows in the daily 21, we'll go down to test these squeeze bottoms, 31,000. And should that give out, it looks like POC and the daily 15 are right below. You could also draw some trend lines to say that we'll be testing those as well. But overall, we need YM to get back above the daily 21 and start pushing back through Friday's levels for the rest of the market to see some upside. Apple, dig into the individual names now. We'll just take a quick look at that 4-hour on Apple. I'm assuming it's already through, since NQ is already through its trend of year. So Apple starting to get above the sharper trend, still has to deal with the more gradual one, which would basically be getting back to this zone, 30 points above. So it's going to take some time. But I think we can do the rest of this prep in the 30-minute frame. Apple, been leading the upside, back above the daily 50. When we look at each of these names, you'll notice some tickers are going to be below their daily 21. Some are going to be above their daily 50, so we need to recognize relative strength. If you're looking at names that are below the daily 21, then you're probably looking for the rejection back down. If you're looking at names above the 50, you're probably looking for continuation to the upside. So, Apple, we have key levels at 144, 147.5. You can see 147.5 was basically the high on Friday. And now our squeeze tops sit right up there with that key level. Squeeze bottoms right down at the other key level. The daily 50 is probably going to be stepping right on top of that 144.5. So on Apple, let's see if the daily 50 squeeze bottoms key level provides support to send us through Friday's high in a bid to get back to our 148, we'll just call it 149, 150, right? If 144 starts to give out, then we are starting to engulf our rally of last week slightly. If 144 gives out, straight down to 142 and the daily 8. If that can't hold, the 21 will be right at about 141.5. And our key zone would be the target below if all of our support gives out. But play the range until it breaks. We could bounce between 144 and 147 all week and just go sideways, right? So just play the range till it breaks. AMD, chips are weak. Can they play a catch-up? Yeah, absolutely. But we saw that MU earnings did not go well, so chips are going to kind of need some extra catalyst, let's say, to play that catch-up trade. They did look decently strong at the end of the week, but the beginning of the week was kind of rocky for them. And they sold off hard with MU's earnings the previous week. So, let's see, they're getting to the daily 8, daily 15. Those could continue to provide resistance that keep chips down. But if we can get through the daily 15 and squeeze tops, it's right up to the 21. Past that, key level, daily 50. Amazon. Amazon post-split has been making some decent legs. And she also can just get stuck in range bound. And now we have a litany of stack squeezes right here together. Right at the daily 50. So another relatively strong name above its moving averages. So let's see on Amazon if this 114, 113.5 can hold this squeeze bottom, Friday's low, daily 50 to send us higher, to squeeze tops, recent highs, in a bid to get back to the daily squeeze top and this recent high as well, 118. BA. I said it all last week and kind of the previous week. We just need BA to stay above its moving averages for the entire market to see upside. And we got that, right? So now we kind of know, at least on BA, a very large name with a lot of weight. As long as it stays above moving averages, things can keep pumping. BA can even start to break away from moving averages and head back up to recent highs and daily 2-day squeeze tops. But should BA start to slip below moving averages and fire this 4-hour squeeze to the downside, then we could see the whole market also rolling over and heading back to recent lows, which would send BA back to these squeeze bottoms. CAT. CAT's made it back to the daily 8 and consolidating. So this is much like chips, right? We made it back up to something key and consolidating. Every consolidation can be a leg higher or a leg back down, right? So, same on chips, same on CAT. It's going to consolidate at the daily 8, play this range until it breaks higher to get back to the 21 for the catch-up trade, or it could stay in range and break lower with the market. So, CAT and chips, very tight, daily 8, catch-up trade potential, or just waiting for the rally to dry out and for the entire market to roll back. Obviously, when we rally, not everything has to rally because they are rotating into specific things. And some names only get kind of a moderate drag up to something key and go sideways till the market decides if it will continue or head lower. When the market does decide to continue, then a good catch-up trade can present itself. But I don't like to try to bank on a catch-up trade while the market's at a key decision point. Google. Talked about this for weeks that we have the split coming. Last week, I think you can see they ran it up into the split. This Friday, last day of the split, so that the following week Google will be much smaller, right? Let's see, we have a 1-day and 2-day squeeze in place on Google that we're about to get up to and test. We can just push in to them and pass them. We do have the daily 200 back up at key levels, 2650, 2700. Which may seem like a stretch away, but last week Google started at 2100 and made it up to about 24, so about a 300-point move. She can make another 200-point move this week if she wants to. But we've also seen a lot of splits lately that did not amount to much. So let's see if they have their fun with Google before the split and if they just send it sideways. But definitely still a good catalyst for one of the biggest tech leaders to continue to the upside for NQ. If this provides resistance, the 2-day and 1-day squeeze top, and this hourly squeeze, which sits at Friday's lows and highs, this hourly squeeze will be a great indication. So play this range until it breaks higher into the higher time frame squeezes or breaks lower. Then it'll be back to daily moving averages. POC also sits pretty much directly with that daily 8. So if we start to give out Friday's lows and squeeze bottom right back down to 2300, where POC and the daily 8 sit. GS. We have some bank earnings this week, JPM, I believe. GS is next week. So we have all these higher time frame squeezes. We are at daily moving averages. I kind of expect GS to chop around this range until JPM reports this week. And then we could see some decent moves in finance. But yeah, daily 50 just outside of these squeezes. All of the moving averages right inside. Probably going to be in this range this week on GS. JPM already starting to break out of that range that it was in Thursday and Friday. So starting to open up these squeezes. Let's see if JPM can work off these squeeze bottoms to get back to tops and above the daily 21 before it reports earnings on Thursday. And according to Benzinga, they said it's a top thing to watch this week, apparently. So maybe they're expecting a pre-earnings run as well. Meta. You know, Meta's been a weaker name, and I'd say until last week, it's just getting... before last week, I'd say it's kind of a weaker name. It got that drag up with Google, because XLC, they usually rotate into the whole sector together. So let's see if Meta, who's already looking pretty darn weak, big old gap down below Friday compared to other tech names. Let's see if Meta's going to pop back up to fill the gap and push higher with Google, or if it's going to give out the squeeze bottom to head right to the daily 15. It does have POC above with the daily 21, so that could be a magnet, turn into a cannon, push it back to the highs. We'll see. Microsoft. Decently strong name above its daily 50, and now we have squeeze bottoms right with the daily 50 and 8. So as long as we can hold the daily 50 and 8 squeeze bottoms, we can head higher through last week's highs to squeeze tops and highs from a couple of weeks ago, right? Netflix. Again, relative strength. I got above its daily 50 with the gap down. Going to be opening right near its daily 21 and 8, which are kind of going to be stacked together. We also have POC down at 180 where the 15 sits. So let's see if the daily 8 and 21 can hold us, squeeze bottoms hold us, and send us back through Friday's levels to get to squeeze tops and recent highs. Or if we roll over back to POC daily 15, which could accelerate us back to recent lows. NVIDIA. Kind of already talked about chips, sitting at the daily 8 and 15. Let's see if it can hold Friday, Thursday's lows and squeeze bottom to head higher through Friday's levels, squeeze top, get back to the 21. And it would be a mission back to 175, 172, where the daily 50 and recent highs sit. QQQ. Daily 50 we got to on Friday, just like NQ, slight rejection and gap down. So let's see if it wants to complete the journey. We already got a nice wick up here to kind of where we close. So that could be an early indication that we're going to try to hold these squeeze bottoms and go revisit that wick, fill the gap, get back to the daily 50 and squeeze tops. But we've got stacked squeezes today, so play the range until it breaks, just like on Friday. We pulled down at first, then we popped up, back and forth until the range breaks. We're still in it. So, Going to be looking for longs off the bottom of squeezes to try to get back to fill the gap. Get higher than Friday. Yada yada. You can see that we also kind of stalled out near recent highs, with a mission to get back to that psychological 300. And we've got plenty of key levels above. 318 is a very key level, and it looks like we have a 2-day squeeze that's flashing in and out up there. So if we can't hold squeeze bottoms, back to the daily 21 and daily 8. But we do have this month's puck up at 295, which is kind of what we slapped pre-market. So Roku, going to be looking like Netflix, relatively strong above its daily 50. Really strong day on Friday, and not gapping down too much. So let's see if squeeze bottoms, all these moving averages continue to hold it up, send it higher with a mission to get up to these higher time frame squeezes, probably daily and 2-day, and back above 100. Shop, not a lot of interest post-split. Snow's been decently strong as well, way above its daily 50 and pulling the daily 8 up with its price action. Already testing a 2-day squeeze top. Let's see if they want to continue to rotate into snow. When do they report? Not to the end of August. So decently strong name. Let's see if it can continue to the upside, get through Friday's high, fire this 2-day squeeze to the upside. I think the daily 200 is up at like 225, 250. So 250 is a big key level. That held it up after IPO, sent it up into the 400s, then it fell back to 250 and kept trying to pop up to 400 again. And once 250 gave out, it was during this year's sell-off. So definitely mission to get back to 250 for Snowflake, but gonna be, gonna take a number of days to get there. So let's see if this 2-day squeeze provides resistance, if we can get through it, with a mission to get back to at least 200 before earnings, maybe, or if the 2-day sends it back down to the daily moving averages. SPX. I love to always say mark your gaps, and I did not mark this one. We have a little gap here from last week. There we go. All other previous gaps have been filled. Even this little gap down got filled on Friday. So with our gap down, we could be opening near this daily 21. We have that gap fill down where the daily 8's at. We were in a 1 hour and daily squeeze on SPX. We don't get a ton of squeezes, so when they do appear, we like to try to track them. So the top of that squeeze back up at key levels, key highs that we need to get to on SPX. With the gap down, going to be opening near the daily 21, so let's see if that can hold, or if we want to dip to the daily 8 and this gap fill for a bounce to get back through Friday's highs in an effort to get to this zone above and the daily 50 past that. If we can't hold the 21 or this gap and daily 8, we'll likely go to fill the gap and probably test our trend lines from lows. SPY. Back above the daily 21. We have some resistance up here at 393. Going to be opening back near 386, 385. Let's see if we continue this trend and go to test the daily 8 and the bottom of these fully get into the bottom of these squeezes. If those give out, we have the daily 15 going to be back down near 380. But if they can hold and start to send us higher, we do have POC at 388, right in the middle of this squeeze, which could be a magnet that sends us, that turns into a cannon to send us higher into squeeze tops through Friday's high to get to 393, 395, where the daily 50 sits for SPY. Tesla. Decently strong name last week. I've been saying for a couple of months now, whenever she holds 657, it's a great time to head up to 744. And whenever she rejects 744, we fall back to 657. It's been the range we've been stuck at between key levels. Now Tesla's above 744. It even on Friday got as high as the next key level, that's 777, 780, on the news that Elon is abandoning the Twitter deal, right? We'll see how that shakes out. He may have to pay something like a $1 billion fine, but I think that's his problem, right? It's not going to impact Tesla. It's not going to come from Tesla. So, and with that deal falling through, if he's not going to also be a CEO of Twitter, maybe he has more time to dedicate to Tesla. So we could see this bullish trend continue on Tesla to send us up 2 key levels above, but we have some pretty thick 2-day and 1-day squeezes that we're running into. So we can push through them and get them to fire to the upside. It can just be a slow, hard journey, one of those slow grinds. So let's see if Tesla wants to continue to lead, or, oh, come on, just let me, I'm trying to get it to auto zoom. There we go. So let's see if it can continue up to 780 if we can't get through Friday's highs and this daily squeeze to get up north of 780 and back to 800 where the 2-day is. We could easily roll back to that 744, that daily 50, and POC is still down at 690 because we saw a ton of volume there last week as it tried to hold. So if we start to give out, daily 50, 744, right back to 718, and then 690. Finally, VIX. VIX, for the first time in a long time, got below 25 on Friday, just enough to tag key level. And now with the gap down, which is very slight, VIX has all the way gapped up to Friday's highs and pre-market highs of Friday. So let's see if we're going to get the same thing. Basically, for us to see upside today, VIX needs to get below 26, make the journey back down, 24.5. If we're going to see downside today, VIX could hold 26, get through 26.5 to get back to 27, and even north of that to 27.5. But let's see, back to ES, we've been on a nice uptrend. I'm sure when we were back in a bullish market, maybe you folks might remember that we could have a nice strong week. We could see Monday be a down day, just to trap people short for a continuation. So let's see if today they try to start to fire these squeezes down, maybe go tag some key things just to come right back up and head higher on the week. Let's see if we try to pop up to do an early continuation and then get stuffed and head back. Anything's possible at any point. So good luck this week. Good luck today, everybody. We'll see you in chat. Thanks for tuning in. And we truly appreciate all of you.